Great, thank you so much. Welcome to the Building Credit Workshop. This class is an important step towards building a better business. My name is Kathy Joisiak. I'm a branch manager at Wintrust Bank, and I will be hosting this workshop with my colleague, Joel Lefkowitz. Joel, please introduce yourself.
Thanks, Kathy. Hello, everyone. Joel Lefkowitz here. I work with Kathy here at Wintrust as a business banking relationship manager. I've been with Wintrust for about 6 years, in banking about 18. Was a branch manager and recently transitioned to a business banker about 3 years ago. So over the last 3 years, I've really had a lot more experience working with small business owners, reviewing their credit report, kind of reviewing their credit. A lot of times these things aren't always black and white. Doesn't mean if your score isn't great, doesn't mean you can't necessarily get a loan, because we look at, multiple factors, the cash flow and things like that. There are other loans that are, the credit score is, really heavily weighted. So overall, we're going to talk about the importance of business credit and, how to, good tips to keep it in good shape so that when you're ready to approach a bank, it's not going to be a hindrance when you're applying for a loan. Nice to be here with everyone.
Thank you, Joel. Just a little housekeeping for us. Please put your questions in the chat and we will answer your questions as we go. If we have a lot of questions, we may just put them on a sideboard and answer some towards the end of the presentation or at the very end. But again, we're very excited to be here and work with you on sharing some tips to building better credit and being ready to apply for financing for your business. Please share the next slide. Great, thank you so much. So today we have a full agenda and we want to make sure that we cover all of the learning objectives. Therefore, we will discuss as a group whether we need to spend more or less time on different topics based on interests. And we have a lot of topics basically going from credit reporting and my business to credit reporting and business operations. Please move over to our learning objectives. Thank you so much. So learning objectives for today. We're going to discuss how personal and business credit reporting landscape relates to your business, how to identify personal and business credit reports and your respective scores, how to establish and build strong personal and business credit histories. We will also share how lenders and others may use your personal and business credit information. In addition, we will discuss credit reporting services that may benefit your small business, and of course, how to leverage strong personal and business credit histories. We will further recognize when your business and personal credit history may become a bigger factor in accessing financing for your business. So next, we're going to go ahead and cover credit reporting and agencies and how important those are to your business. Please go to next slide. And we will go ahead and go to the next one. Great. Why is credit so important? As an entrepreneur, your personal business credit histories can create opportunities, or of course, they can limit them. When you apply for financing, financial institutions and suppliers you use will review your personal credit history and may review your business credit history. Credit history helps creditors decide whether to extend financing, and if it is granted, what terms are being provided. To effectively manage your debt and obligations to financial institutions and trade creditors, you should certainly understand that business lenders may know about your personal debt as well. Unpaid personal debt can lead to a business loan denial. Healthy business and personal credit histories help grow and sustain a healthy business. Credit reporting can also help entrepreneurs improve business operations in other ways by helping them assess and reduce the risk. For example, you may want or need to request the credit report of a potential business customer to consider your risk before entering into the relationship. So we will discuss using credit reports in your business operations in more details in the following sections. Go ahead and go to the next section. Definitions. Please go to the next slide. Definitions of credit. What is credit? Credit is the ability to borrow money based on the promise that you will pay it back. Car loans, credit cards, small business loans, and mortgages are all examples of credit. Financing or lending products. While using too much credit can lead to large debt loads, being able to use credit responsibly can be critical to your personal and business financial stability and, of course, its success. For example, having access to financing products can help a business take advantage of investments or manage unexpected cash flows. When we use the word credit in this module, we're generally referring to a business or personal credit history, not capital, financing, or lending. Money Smart for small business banking services provides an overview of different types of financing options, sources, and products and services provided by banks and other finance companies. Please go to the next section. Taking a peek at personal credit history versus business credit history. We're going to talk about both of these, and I would like to explain further what these terms mean. Personal credit history, also called consumer credit history. It means it's your personal credit history is a record of your use of credit now and in the past that's reported to consumer credit agencies. Business credit history, also called commercial credit history, is business credit history referring to your business record of handling debts and financial obligations that are reported to your specific business. And it is reported by credit agencies, including supplier accounts that provide trade credit. What does that mean? That means if you're buying anything on credit from your suppliers, if you're a restaurant owner, you may buy food that way or drinks for your business. It just means that they are also reporting that activity and making sure that you're paying in agreed times. Please go to the next slide. So having strong personal and business credit histories can support the growth and, of course, sustaining of an emerging small business. For example, strong credit history will allow you access to financing to start or expand your business. It also enables acquisitions and financing of raw materials and your inventory. It allows investment in equipment, materials, vehicles, and other market opportunities. It facilitates borrowing money to help businesses address working capital shortfalls. For example, a business may use a line of credit to accumulate inventory for an upcoming sales season or to fill a large order. Let's move to the next slide, please. Speaking further about personal and business credit spectrums, I would like to share that it takes time for a business to build a credit history. Entrepreneurs often have to assume the responsibility of financing their business, particularly during the startup phase. Therefore, personal credit history is extremely important. However, entrepreneurs should aspire to establish a positive business credit history as they grow so they can bolster their financing and other opportunities over time. Let's discuss this particular chart that you're looking at here. If your business is new, lenders will review your personal credit history as they decide the terms of your financing for the business because they have limited business history and credit performance to evaluate. Lenders view your personal credit history as an indicator of how you will likely manage your business finances. Establishing a credit history under the name of your business through trade relationships with your suppliers and or through a business credit card may also help you obtain additional credit for your business in the future. As the business becomes more mature, business credit history becomes much more meaningful. Even so, it is common for entrepreneurs to be required to personally guarantee and or co-sign business loans. Underwriters may place a greater weight on business credit history for larger, more experienced, and well-resourced businesses. However, a business owner's personal credit history remains relevant for most small business financing that will be available. To maximize your business success, it's important to fully understand what you can do to build a strong personal and business credit history. And at this moment, I would like to go ahead and pass over to Joel, who will expand on the impact of personal credit and your business.
Thank you, Kathy. Doesn't look like we have any questions in the chat so far, but yeah, just a reminder, if anything comes to mind, just feel free to put it in there. We're happy to stop and address it as we go. So kind of continuing on with the impact of personal credit on my business. So in this section, we will focus on how to understand and manage your personal credit history and get a better sense of how it might affect your business. Much of the information in this section is a modified and abbreviated version of the detailed information on a personal credit report and scores that can be found in like other presentations. You can find these on the FDIC website. If you go to fdic.gov/moneysmart, there's lots of great information on there, not just this presentation. So what is a personal credit report? A personal credit report or consumer credit report is a record of how you have managed credit accounts in the past. It tells lenders the following: who you are, how much debt you have, and how long you've had it, how frequently you have applied for credit, how much credit is available to you, and how much you are using, whether you have made timely payments for credit accounts, whether there is a negative information about you in public records, such as bankruptcies or foreclosures. So we're going to take a detailed look at a sample credit report in a moment, but first, we're going to look at the companies that maintain your credit report. So there's three bureaus. Many of you are probably or maybe familiar with these. They include Equifax, Experian, and TransUnion. These companies receive information from creditors, usually monthly. Make sure on the right slide. Yeah, I think we're okay right now. So these companies receive information from creditors, usually monthly, about whether you're making loan, credit card, and other debt payments on time. They also collect information from public records, bankruptcy filings, etc. Many consumers use online credit education websites to access credit report information and credit scores, but these companies should not be confused with consumer credit reporting agencies. It's great to track your credit. Many customers do, and it's just a good habit to kind of get a feel of where you're at. Doesn't necessarily mean it's 100% accurate, though. You really got to check in with the bureaus to see what your credit report is. If you could go to the next slide, please. So continuing on with the impact of personal credit on your business. The reports, I just want to make sure I'm on
I think we need to go one more slide.
Yeah, one more slide, please. Okay. So personal credit information, the reports from consumer credit reporting agencies may look different, but they generally contain the same basic information. So personal identifying information such as your name, social security number, current and previous home addresses, telephone number, your birth date, current and previous employers, your spouse's name if you're married, credit history, including credit account records with different creditors that show how much credit has been extended, how much is being utilized, and whether payments have been made on time. The credit history section might include accounts that are open, that have been closed by you or a creditor, or that are in collections. If you dispute a record, you can request the credit reporting agency and a consumer statement to the credit report indicating that you disagree with what is listed. A list of inquiries reported by creditors and other authorized parties, including you, who have requested and received your credit report. Hard inquiries indicate that you may be searching for credit. And then public records information about you as a consumer, if any exist, including bankruptcies and foreclosures. Certain public records, such as tax liens and civil judgments, may not show up on your personal credit report. If you know or think you may have any liens or judgments against you, please check with the appropriate jurisdiction for more information. Do not ignore them just because they don't show up on your personal credit report, because they're probably going to show up somewhere else when you need something.
Please turn one more slide. Yeah, one more.
Here it is. Thanks. I think we fell a little behind. There we go. All right, and then we can go one more.
No, okay.
That's good. Okay. There are two types of credit inquiries. There's hard and soft inquiries. Hard inquiries occur when you apply for credit. They can lower a credit score, often minimally, and account for about 10% of your credit score. When lenders or other businesses obtain your credit report, they will be able to see up to 2 years worth of hard inquiries. Utility companies generally make hard inquiries that affect credit scores. If your credit report is obtained because you are co-signing a loan, this will also result in a hard inquiry. Soft inquiries occur when you or others check your credit report for informational purposes, such as when you obtain your own report. A potential employer obtains it, or when a lender determines you are pre-approved for credit offers, such as credit card, for which you have not applied. Soft inquiries do not affect your credit score. Only you can see them on your personal credit report. And just an aside, if you're working with a bank and you're thinking about applying for a loan, it's always a good habit to ask them if it's going to be a soft or hard inquiry, just so you get an idea of what you're getting into. Just for example, here at Wintrust, we have some of our commercial loans, we only do soft inquiries on, and then other loans we do hard inquiries on. So it does depend on the type of loan and institution. So just a good question to ask, so that you know how your credit score is going to be affected. Here we go. Now we're lining up. What does not appear on a personal credit report? So personal credit reports do not contain the following: personal checking and savings account balances, personal income, medical history, purchases made with cash or check, business account information, race, gender, religion, or national origin, driving record, and marital status. Business account collection information may appear on your personal credit report if you default on a loan and have debt collection activity that involves personal assets, such as through a personal guarantee or a cross-collateralization loan. In some states, creditors can pursue collection for up to 20 years. And as Kathy stated above, most small business loans require a personal guarantee. So, I think that's something that's misinterpreted a lot of times. They think it's just going to be under the business's credit. When you do a commercial loan, it's going to be tied to both your personal and business credit. It can affect both. Next slide, please. So what is a personal credit score? Your personal credit score, also known as a consumer credit score, is based on the information in your personal credit report. Your credit score is a number that helps lenders and creditors determine your credit risk. That is the risk of a default. It is common for lenders to use credit scores to help make loan decisions. Lenders may use one or more credit scores to help make a lending decision, and these scores may predict different types of risk. Lenders may generate the scores themselves or use a score calculated by another company. Credit scores frequently used are generated by two score modeling companies, your FICO and Vantage score. FICO score and Vantage score, what are these? So there are multiple credit scores, but we will discuss only FICO score and Vantage score. These two score models are calculated in different ways, but they generally use a score range of 300 to 850. Knowing how the scores are calculated, and you can go to the next slide. Knowing how the scores are calculated can help you understand how to build or improve your personal credit scores. Payment history is the most important factor in FICO score and Vantage score calculations. That is why it is important that payments you make on credit accounts are posted by the due dates. Outstanding debt, particularly the percentage of credit used or credit utilization, is another important factor in the calculation of these credit scores. That is why it is important to avoid keeping high balances on credit card accounts or maxing out any revolving credit account. We see that a lot in my world, working capital, lines of credit getting maxed out and never paying down the principal. I mean, same with credit cards too. all creditors are going to want to see that the principal balance is being paid down too, because otherwise it's a risk factor. If principal isn't being paid down, they kind of think, well, we might not ever get paid back if you're only making the interest payment. So that's always something to keep in mind.
And we have a question, Joel, in the
Yeah.
chat. The
Mhm.
question is, do we need a business credit card to build business credit?
It can help. It can certainly help. Yeah, because it does create a credit history on your business. So it certainly helps, and it's also nice to get rewarded, with purchases. Typically, like when you're looking for a small business loan, banks are going to look at the historical financials of the company and the performance. So, revenues are going to be important. How much sales is the business generating? And then what's the bottom line, the bottom of the tax return? Like what's the net income? Banks typically do a cash flow where they're going to kind of look at, your overall revenues and take out, your cost of goods sold, subtract your SG&A, and then we kind of get the amount that you have available to service that debt. And then if you have other debt, we take that out. And so we do a cash flow essentially. So that's going to really be an important factor when you're applying for a loan. There's other smaller loans that are going to be really, your credit score is going to be even more important on that are a little more black and white. But your revenues, for example, we have an easy access line of credit. You can apply for up to 20% of your previous year's revenues. So that's a factor, your revenues, but then also your credit score. You have to have a minimum credit score. Personally, we actually don't look at your business credit score for the minimums, but we do look at how you're paying creditors back. Are you revolving those lines? Are you paying down principal? So long-winded answer is yes, it can help having a business credit card, but it's not going to be the most important factor.
Great, thank you so much. And we do have another question, but we will definitely get to the answer as we move along the presentation here and answer that for you.
Yeah, and just the best place to check your credit score is to reach out to the credit bureaus. I mean, we pull Experian, but other creditors will maybe use one of the other three. You can check with the U.S. bureaus, and they can provide an accurate credit score.
And we will provide additional ones.
Yes, yeah, I think we have some resources as well at the end. And then other factors that influence your scores include the length of your credit history, how often you have applied for credit, and how many and what types of credit products you're using. So that goes along with the business credit card, yes. The weight of the credit score in evaluating your financing request or in the pricing of financing varies significantly from one financial institution to another. So it kind of helps to just, have a conversation with your banker. All right, we can go to the next slide. So what is a good personal credit score? In general, higher credit scores mean that you are likely to be a lower risk for a lender. In other words, a better borrower. People with the highest credit scores generally qualify for the best rates and terms on loan products. If you have a low credit score or no credit score at all, you may be denied a loan altogether, or you may have to pay a higher interest rate. People with fair credit may qualify for some loan products, but not for the lowest interest rates. Another material factor for loan approvals is the borrower's debt-to-income ratio, reflecting the amount of income available to make loan payments. I mean, ultimately, lenders are going to want to see, is there enough capital here? Does this borrower have the means to repay the loan that we're working on? So keeping up with your personal credit report is, we can go to the next slide. So at least once each year, order and review your personal credit report for free from each of the three major consumer credit reporting agencies. You can do this through annualcreditreport.com. Again, that's annualcreditreport.com. Doing so regularly and within 60 to 90 days before you apply for credit will help you ensure the accuracy of your credit report and address any errors before submitting your loan application. I think this is the big one. Speaking from experience, a lot of times when we get these loan applications, a lot of times it's just stuff comes out there that you weren't expecting or they didn't know about. A lot of times we see these small collection items, $500, even $80, sometimes $3,000, but not like huge. And it's just from vendors, and they didn't know about it. Maybe it's even a vendor they're currently working with. So it's just helpful to clean that up before you apply. Otherwise, it's just going to cause more delays because typically you're not going to be able to move forward until you have that, cleaned up and proof that it's been paid off. If there's errors, you can file a dispute. Consider disputing directly with the credit reporting agency that created the report on which you found the error and with the creditor that provided the inaccurate information. You can go to the next slide. And then we can go to one more slide. Thank you. So another helpful thing is that they provide copies, never originals, of all documentation to support your claim. I'm sorry, this is for dispute. So you want to provide copies of all documentation to support your claim when you file the dispute. Once the error resolution process is completed, request an updated credit report from all three consumer credit reporting agencies to verify that the changes were made, allowing sufficient time for the correction to be made. You may be able to file disputes online with the credit reporting agency. When filing a dispute by mail, use an option that generates a tracking number and will provide a notification of receipt. This tracking number and receipt will establish a timeline that determines when you may expect to receive a response from the creditor that reported the information or from a credit reporting agency. When you dispute an account, the creditor or credit reporting agency must respond within 45 days. Again, we're only talking about personal credit. So I think the moral of the story there is just to get ahead of it. Might be a nice idea after this presentation, if you haven't in a while, to check in with those reporting agencies and request the free copy. See if any surprises are on there so you can get ahead of it and clean it up. Speaking personally, I've had to do that myself. I had to surprise myself and was able to file a dispute to get it off. Okay, we can go to the next slide. So we're going to discuss the Fair Credit Reporting Act. And what is this? This and associate amendments through the Fair and Accurate Credit Transactions Act define key regulations for consumer credit reporting, including the following. The purposes for which lenders and other businesses can obtain your personal credit report. So the FCRA and FACTA restricts the use of personal credit reports to permissible purposes, such as extension of credit, employment, and insurance underwriting. Anyone using a personal credit report must have a permissible purpose. When you need to give others permission to see your personal credit, so in certain cases, such as for employment, consumers must provide prior written permission for others to request and view their personal credit reports. The FCRA and FACTA specifies when and how consumers need to provide permission for others to access their personal credit. Your rights to see your personal credit report. The FCRA requires each of the National Consumer Credit Reporting Agencies, that's Equifax, Experian, and TransUnion, to provide a free copy of your credit report at your request once every 12 months. In addition, you must be told if information in your file has been used against you. For example, if you are denied a loan because of negative information in your personal credit report, the lender must give you the name, address, and phone number of the credit reporting agency that provided the information that informed the decision within 30 days. Your rights to dispute incorrect information on your personal credit. If you identify incomplete or inaccurate information on your report and dispute it with the credit reporting agency, the creditor must investigate unless your dispute is frivolous. A dispute may be considered frivolous if you are disputing everything on your credit report, whether it is incorrect or not. Beware of credit repair organizations that tell you to dispute everything on your report. Also, sometimes loan documents contain language that gives lenders the right to obtain your credit report at their discretion, which is common in an existing credit relationship. If so specified in your loan agreement, you may give them permission to do so by signing the loan documentation. All right, so we can go to the next slide, please. All right, so next we're going to discuss best practices for building a strong personal credit history. In addition to ensuring that your credit reports are accurate, consider the following to improve your scores. Pay your loans and other bills on time. That's probably an obvious one. As we have learned, repaying credit accounts on time is the most significant factor in increasing any credit score. If you have had any trouble with credit in the past, you can rebuild your credit history by paying what you owe on past due accounts. Another one is minimize how much you owe in relation to your credit limit. We've discussed this before. So low credit utilization shows that you are not overextended with your debt obligations. For example, if you are using $1,300 of your $2,500 in available credit, your credit utilization is 52%. Pay off outstanding collection accounts and other debts that could lead to legal action. If you're able to do that, that's definitely a great idea because typically that's going to prevent credit being extended if there's collection items. Avoid negative events, such as bankruptcy or foreclosure, which make it difficult to obtain business and consumer credit and will be reported in public records. If you've had a bankruptcy or a foreclosure, I mean, there are, if enough time has gone by and it's been, rectified, there are instances where you'd still be able to obtain the loan. But if it's current and it's going to make it pretty difficult. Comparison shop for a mortgage or car loan within a limited period, no more than 45 days. So think carefully before applying for new financing because hard inquiries negatively affect your credit scores and determine if the loan is essential. That is something that the bank does look at too. If you have multiple credit inquiries, that can affect your chances of an approval. So definitely think about that before getting a hard inquiry. Maintain a mix of installment and revolving credit accounts. This shows lenders that you can manage different types of credit successfully. You do not have to carry much, if any, outstanding debt. For example, if you can use a credit card once each month for basic household purposes, but pay it off in full every month, the banking service module provides details on types of loans and financing options. And then last one is do not close old accounts or those that have been paid in full. This can lower your available credit limit, leading to an increase in credit utilization on your remaining accounts that could hurt your personal credit scores. If, however, you are paying fees for an account that you do not need or use, it may make financial sense to close it. So if it's a free credit card, you don't use it anymore, but you have good history on it, best practice would be to keep that open. Next slide, please. All right, so next is when personal credit history is important for your business. Personal credit may be important at various stages throughout the life cycle of your business. In particular, when establishing a new business, as Kathy said, your personal credit is going to be weighed heavier. Personally guaranteeing or co-signing a business loan, most of the time you do have to do that. Accessing financing to grow an existing business. Obtaining trade credit from suppliers or inventory or raw materials before receipt, and qualifying for other business opportunities such as government contracts. If your business is new, you have not yet had the opportunity to build your reputation as a business owner or establish a credit history under the business's name. Therefore, your ability to secure loans and establish contracts will depend heavily on your personal credit history. In most circumstances, a lender may require you to guarantee a loan or other financing products, such as a line of credit, for your business. As a guarantor, you are personally liable for the debt, even if the business is unable to make payments. Consider the risk of loss and the terms of such a guarantee carefully. And then for more information, more details on the lending process, consider attending a local Money Smart or small business banking services training, or review the curriculum on your own. And that can be found at the FDIC.gov website, /MoneySmart, I believe it is. All right.
Great. Thank you, Joel. We have one more question.
Yeah.
What is the impact of medical bills referred to collection on your credit report?
I believe there's a recent regulation in place that banks can't consider the collection on medical bills in their crediting decision. So I believe if they have the credit score and everything else looks good, that wouldn't have an impact. And then with that, I would also again encourage you to speak with your bank before applying. That is what I believe I've heard. So that's a nice change. I think that's a pretty recent change. Um, how long does the hard inquiry stay in your report? I believe I said that earlier. I believe it was, I think 2 years. I think that was earlier in the presentation. Kathy's going to take the next section. I can try to find that answer to confirm that as she continues on.
Great. Thank you, Joel. And we also had a question regarding student loans.
How do you know where are we at here?
Same question as the medical.
Student loans are, yeah, we do factor, student loans are still factored into your debt to income ratio, along with your, payment history. So it's important to make on-time payments. I know a lot of those payments can be deferred. So, if you're not making the payment, that's fine, but the debt would still show up on the credit and be considered in the crediting decision.
Great. And we have a couple more questions. How do you know whether an expense will be added to your personal or business credit?
Well, yeah, I think earlier in the presentation we mentioned, if you anything that you apply for, if it's personally, it's if it's just an inquiry, the inquiry will show up. If they do if it's a hard pull. If you're approved and it is something that you're currently using, then yeah, that's also going to show up. Same with on your business. If it's under your business name, it'll show up under your business report. So if it's a business loan or a business credit card, it will show up on your business credit and it won't show up on your personal credit report, and vice versa. But what we mentioned before is that, if you are a personal guarantor on your, business credit card or business loan, which is very common and most likely, if you, if you default on that or you start to make late payments, that can show up and negatively affect your personal score as well. So they are still tied in, but the actual vendor and creditor that you're using will only be on the associated credit report, whether it's personal or business.
Great. Thank you, Joel. We have a couple more questions here. Another one that ties into the same, one of the questions that we've answered is, does the business structure eliminate your personal connection to your business, credit, and its respective loans?
No, it doesn't. I mean, as the owner of your business, you are still tied to it. So I mean, if we're talking in terms of credit, it's not going to separate you unless you find non-recourse loan where a bank doesn't require you to personally guarantee it. In that case, it would just be the business. I mean, for nonprofit organizations, because there's no owners, there would be, nobody has to personally guarantee the loan, but the business would just have to stand on its own and be able to support the loan according to the bank's or lender's credit policies. But in this case, we're talking about, credit history, extending credit. It's very common and most common typically that you are going to be personally tied to your business because you're most likely going to be personally guaranteeing it. Whether it's an LLC or whether it's incorporated, it's going to work the same way.
Okay. And another question was how long the business should be established to get a business loan?
Well, that varies. I mean, the longer the business is established, the more favorably the lender is going to look at it because there's just more history to go off of. Most conventional lenders will lend off of the, history and historical financial performance of the company. So, if you've been in business for 3 years, lenders typically like when you're applying for loans, standard practices to get 3 years of historical financials, 3 years of tax returns on the guarantors and the business. So that's ideal. If you're under 3 years, there's SBA financing programs. So the SBA, lenders that partner with the SBA, can do these SBA loans that are have an SBA backed guarantee. Sometimes it's a 50% guarantee, 75% guarantee. which mitigates some of the risk. So in that for newer businesses, that can be an option. If it's a brand new business, I can say like it can still be pretty tough. Typically, like we said before, the bank, the only option is to really look even harder at the guarantor. So personally, how much, what do your assets look like personally? How much liquidity do you have? Because, the bank's going to ask for projections, like 2 years projections, but that's what they are. They're just projections. And when you're new, unforeseen things happen. So that's just very risky. And so the bank's going to look at, how much cash liquidity do you have on hand? How strong are you financially? Where let's just say something doesn't go according to your business plan and your projections, business is slower than you thought. Banks are always going to look conservatively like that. Do you have the means to continue to make these payments when the business cannot? Because when you're doing a business loan, the business's cash flow, the balance sheet is going to be your first form of repayment. And so the second form is going to be the guarantor. And so it's just going to be more heavily weighed. But the SBA could be an option for newer businesses, 1 to 2 years newer, and even startups. All lenders maybe have a different appetite for that. So again, good time to talk to your banker about that.
Great. Thank you so much. And just one more question. How does paying a credit card with a payment agreement affect my credit report if it's already closed?
Yeah, I mean, it could still negatively affect your chances to get a loan because while you're making payments on it, that's great. If I'm understanding it right, it means that you weren't making the payments on time and you came up with a payment plan with the credit card company. So, for example, we have a loan, our easy access loan, that is just heavily weighed on the credit report, and we probably need to get that paid off if I'm understanding this payment plan right before we can move forward. So it's a case by case, but yeah, I mean, it's not as ideal as, just on time payments or paying it off. At the same time, what you're doing is great because that means eventually you're going to get paid. Eventually going to pay it off, which will clear it. And it also shows creditor that you're working with your credit card company, and you're not just ignoring it, which some people do, and then that's really going to hurt their chances.
Perfect. Great. And one more question, and then we'll get on to the next section. Is there a list of banks we can refer small business owners to that will understand they're starting to build their credit history?
Sure. I mean, is there a list of banks? Yeah, to be honest, I recommend community banks. I think community banks tend to have more of an understanding of small businesses located within the community. Um, they tend to have local underwriters, so like the lenders they communicate directly with those underwriters and the approvers, whereas a lot of the big national banks, their underwriters are located in some other market, the approvers are in some other market. A lot of times they just kind of go, there's like an algorithm that'll just kind of shoot out an approval or not. A lot of the smaller community banks, it's local. There's more trying to gain understanding of the business and where you're going, get the story. So I just think overall, a community bank might be a good place to start.
Absolutely. And someone added here, credit unions are also a great resource. And of course, you can take a peek at the SBA website and take a look and see who they are working with.
Yes, two good tips as well. Absolutely.
Great. Okay, so let's go on with our next section. So if you could please change the slide. Perfect. So in this particular section, we're going to go ahead and touch base on business credit reporting. We've learned so much about how to build and manage your personal credit history. We're going to go ahead and move on and discuss business credit reporting. So let's move it to the next slide. Okay, so what are business credit reports? Similar to personal credit reports, business credit reports provide information that could help lenders and, of course, other businesses such as vendors you're working with or companies seeking contractors assess the risk of working with your specific business. Business credit reports tell lenders and others about the credit performance of your specific business. So let's go ahead and move on. How is personal credit versus business credit reports seen? we will be able to compare those with the information contained in a business credit report. While business credit reports are not all the same, they generally provide the following information: your business's identifying information, your business credit history, business background, its respective registration and financial information, and public record information. Unlike personal credit reports, business credit reports are generally available to the public. This means that potential customers, your partners, and any suppliers can purchase your business credit report from the business credit reporting agencies. Business credit reporting agencies may, but are not required to, provide your business with a free business credit report upon your request. So let's go ahead and move on to the next slide. And let's talk about the major players that are out there for credit reporting for businesses. These are three well-known business credit reporting agencies, and they are Dun & Bradstreet, also known as DNB, Equifax Business, and Experian Business. While much of the data that they will collect may overlap, these agencies focus on slightly different aspects of a business while preparing their business credit reports. What do I mean by that? Let's take a look at the examples here. So Dun & Bradstreet focuses solely on business credit. They emphasize on how your business interacts with its vendors and suppliers. And this report is known as trade credit performance. The next one is Equifax Business. They compile business credit reports with a focus on small businesses' experience with business lines of credit and loans from banks and non-banks. Experian Business focuses on bank and non-bank lender data, vendor and supplier data, and information in public records. You can also take a peek at the SBA website, which contains a wealth of information on business credit reporting, including other business credit reporting agencies. In this presentation, we will focus on DNB, Equifax Business, and Experian. But a few other credit reporting agencies produce business credit reports as well, and they include PayNet and LexisNexis Solutions. So what is PayNet? They are a proprietary database of small business leases, loans, and lines of credit that it sells to banks and non-banks. Although many entrepreneurs cannot order their own PayNet business credit report directly, if you are denied financing by a company that uses this report, PayNet will give you a free copy provided that you make the request. Furthermore, LexisNexis offers a business credit reports to lenders making small business loans. They use credit data from Small Business Financial Exchange combined with non-traditional data from LexisNexis. SBFE is a nonprofit trade association for small business lenders, but it is not a business credit reporting agency and does not compile, create, or sell business credit reports. Instead, it facilitates the exchange of business account data to companies such as Experian, DNB, and LexisNexis that have licensing agreement with the Small Business Financial Exchange. Great. So moving on, please change the slide. We're going to go ahead and discuss information that business credit reports contain. So let's go ahead and take a look at these. A business credit report from DNB and of course Experian Business and Equifax Business includes many types of information. The information that we are speaking about is highlighted here on our slide, and it includes business names, aliases for the business addresses, phone numbers, and websites. It also uses a data universal numbering system, which is also called DUNS. It also provides industry classification codes. Companies that have granted credit to the business will be highlighted. Payment data from suppliers and creditors. It will also mention risk scores and ratings, registration and incorporation data, including the business structure and its respective ownership. It will also have history of the business, any affiliations that the business may have with other companies, corporate financial reports. It will also highlight contracts, grants, any loans and debarments from the federal government. It will also use self-reported data, and it will also share Uniform Commercial Code or UCC filings. It will also share any sort of lawsuits that the business may have been involved in, any liens that are placed on the business, and judgments. Business registrations will also be available. The city, state, and county court registrations will be provided. It will also show incorporation and current and past bankruptcy filings from the state and county courts. This list includes examples of what may be on a business credit report. Unlike personal credit reports, which may look different but contain the same basic information, the information on business reports can vary significantly from one to the other. Can everybody hear me okay?
I can hear you clearly, Kathy. Yeah.
Great.
I heard. Yeah. Mm-hmm.
Okay, perfect. So let's go on and take a look at the regulation of business credit. A fundamental difference between consumer credit reporting and business credit reporting is that information reported to business credit reporting agencies is not subject to FCRA and FACTA. Nonetheless, business credit reporting agencies typically have procedures to make credit reports available to businesses and to manage disputes when inaccurate information is reported. The FCRA FACTA is relevant to businesses that have a permissible reason to access personal credit reports or reports to consumer credit agencies. Expert legal advice is recommended if businesses seek to do either. We will learn more about FCRA and FACTA implications for your business in one of the next sections. Please keep in mind that Equal Credit Opportunity Act, while not directly focused on credit reporting, other laws and regulations are applicable to a small business's access to credit. As an entrepreneur, you have rights under the Equal Credit Opportunity Act, which requires creditors to ensure underwriting and pricing are free from discriminatory practices. Creditors are also required to act on your credit requests in a timely manner and keep you informed of their status. If you feel you've been denied credit or you have been offered credit on worse terms because of your race, color, religion, national origin, sex or marital status, or age, or because all or part of your income comes from a public assistance program, or if you believe you have been discriminated against in any way, you have various options to consider. File a complaint with the creditor. Report the potential violation to your state's Attorney General's office, the Federal Trade Commission, also known as FTC, the bank's primary regulator, Federal Reserve Bank, Office of the Comptroller of Currency, or also known as FDIC, and the Consumer Financial Protection Bureau. Or you can also hire an attorney. To learn more about your rights under ECOA by going to the websites of the above mentioned agencies and searching for keyword ECOA. Great. Let's go on and talk about business credit scores. Let's move to the next slide. Great, thank you so much. Just as there are many different personal credit scores, there are also many different business credit scores and ratings used for different business purposes. DNB, Equifax Business, and Experian Business each have their own scores and rating systems that lenders and other companies use to make credit decisions. So let's take a look at DNB. They offer predictive and performance-based scores. The DNB PAYDEX score ranges from 1 to 100 and it reflects a business's payment history as reported by vendors to DNB. A minimum of 3 vendors must report a business payment history for DNB to generate a PAYDEX score for that specific business. PAYDEX is primarily used by vendors and suppliers to determine trade terms such as invoice payments in 30 or 60 days. Having more time to pay your bills can help you better manage your cash flow. And then let's take a look and talk about Equifax Business, which offers a variety of business credit scores that are used by trade creditors, and some lenders also utilize Equifax Business. Its payment index score also ranges from 1 to 100, so it's very similar to PAYDEX score. It reflects business payment history and information from creditors and vendors, and it provides delinquency and failure scores. The payment predicts the likelihood that a business will be severely delinquent, have an account charged off, or go bankrupt within a 12-month period. So they are really a predictor of what could potentially or may happen in a 12-month window. When we look at the Experience IntelliScore Plus, the score again ranges from 1 to 100, as the other two do the same, and it is calculated from numerous data points. It looks at things such as age of records on file, the payment trends, number of trade lines, outstanding balances, credit utilization, public records, the number, type, amount, and frequency of them, as well as how recent they are, and more. It too is used by different types of creditors, including some lenders. A key difference between your personal and business credit scores is that personal credit scores generally measure similar factors, using information from your personal credit report and have similar ranges. Business credit scores, on the other hand, use a wider variety of rating systems focused on measuring different factors that are found on your company's business credit report, as well as from sources outside of the report. So let's take a look and see if we have any questions. I think we're doing pretty good on questions. Let me take a peek. I think we're good. Let's go on and talk a little bit about checking your business credit reports. Let's go to the next slide, please. Great. So as with your personal credit, checking your business credit report can help you identify and correct errors that may affect your specific business. On the Dun & Bradstreet website, you can create an account that allows you to view and update basic information on your DNB business credit report and submit up to 5 disputes at a time. You may log in to your DNB account anytime at no cost. In some cases, you may have to pay a fee to view your report. And I will share the DNB website with you at the end of the presentation. So if you would like to take a look at that for your existing business, you're welcome to do so. Experian Business, Equifax Business, and DNB offer paid services for small business owners who are interested in monitoring their business credit scores or adding more specific information to their business profile, such as self-reported expenses. A number of services are also available for monitoring your business credit reports and scores from business credit reporting agencies. So for example, some online platforms let you see business credit reports, scores, and ratings in one place. Some may also provide customized recommendations on how to improve your credit history, as well as product recommendations. Some of these services are free and some are available for a fee. You should really rely on expert advice from Small Business Development Centers or SCORE, which is affiliated with or is a SBA resource partner, and they will be able to help you attain some of these resources as well. Lenders and other companies use different business credit scores to make financing or other decisions about small businesses. Although a business credit score is important in the decision-making process, it is not the only factor. Many lenders use their own proprietary scores instead of the business credit scores described in this section. So you have to keep that in mind as well. Financial institutions want to be confident that business cash flow is sufficient to cover the requested debt that a business is applying for. And you can also take a look at the FDIC website and look through the Money Smart for small business owners. And the section you would focus in on is managing cash flow. And that will also provide more information on this specific topic. Correcting inaccurate information if you find it on your business report. The best places to go to is Experian Business. It's http //sbcr.experian.com. And the phone number is 800-303-1640. And then for DNB, it's www.danbdb.com. And the phone number for them is 866-248-1450. And Equifax is www.equifax.com/business/business/credit reports/small/business. And their phone number is 800-727-8495.
All right, Kathy, I just wanted to pause for 1 second. It looks like we have a couple questions.
Great.
Yeah, I think just to how to dispute your business credit, how long does it stay on your credit report? Yeah, you can call any of the credit bureaus, give them a call to dispute it. And you can also go to their website and you can submit a dispute online. That would be the best way to do that. If you're able to clear the dispute, like win the dispute, it should take like a cycle, probably like 30 days for it to clear off your report. And then the other question is that public information for other to see about your business? I'm not sure. Can you clarify that question? DNB information, is it public? You can look up a DNB score, but that not everything is public on that. That's my understanding. Kathy, do you have any other input on that one?
Nope, that's it. You're right.
If you default on a loan, yeah, that's going to negatively affect your credit score, both on the business and personal score. My advice there, if you're worried about a default, my advice there is talk to your banker. I think the worst thing that a business owner can do, or a borrower can do, is if they start to get in trouble and feel like they can't keep up with the payments, they get scared and they just ignore. They cut off communication. They ignore that their lender, the person they have the loan with. That's the worst thing they can do, because then the bank, they don't know what's going on, and it's gonna be the worst thing for your credit, because the bank has no choice but to just completely charge off the loan. Whereas if you talk to your lender, talk to your bank, talk to whoever your loan is with, tell them what's going on. They will try to work with you to like restructure your loan, restructure your payments, to figure out something that you can afford, maybe re-amortize it, and that way your credit doesn't get completely hit, because then you're not going to be able to do anything moving forward. So just talk to your lender if you feel like you're at risk of default. Maybe they can work something out with you. You formed an LLC and never did anything with it. Is it still on your business credit? If you never, it had any credit extended to that business, then you wouldn't have any, credit on your credit report with that business. Okay, I think that covers it for now. Kathy,
Great.
Yep.
Excellent. Let's go on to talk about establishing business credit. So let's turn the page. Excellent. Business credit reports help entities receiving the report determine whether and under what terms and criteria to work with your business. A good business credit history might give you a competitive advantage. So, for example, lenders may use information on a business credit report as part of their decision to approve and set the terms of your financing. Suppliers and shipping companies review the credit history of your business when deciding whether they will allow you to defer payments and what terms they will provide. Customers can verify if your company is a legal and reputable entity when it is listed with a business credit reporting agency. Insurance companies may use your business credit report information to help determine the risk level of your business. The higher the risk, the higher the price of your commercial insurance policies. Procurement officers may evaluate your ability to execute government contracts based on your business credit report and other factors. Remember that many business credit reports are available to the public. A strong business credit report can increase your company's business prospects. We will go ahead and learn what you can do to establish and sustain a healthy business credit history. So let's move on, please. So establishing your business credit. To start the process of building a credit history for a business, you must obtain an employer identification number known as the EIN from the Internal Revenue Service. You may need an EIN number to do business with different types of entities. If you wish to do business with the U.S. government, you should also obtain a DUNS number through Dun & Bradstreet. If you already have open credit accounts or trade credit for your business, find out if you already have a business credit history by searching your company name on the websites of each of the business credit reporting agencies. If your business is listed, request a report to see what information has been reported and make sure that everything is accurate on that specific report. If your business does not have a listing with the business credit reporting agencies, ask your lender, your supplier, and any vendors you're working with if they will start reporting to the business credit reporting agencies, or consider establishing relationship with those that you know already do and will report. Once you have records established at one or more business credit reporting agencies, you can build your business credit history by updating or correcting your information, including figures from your annual financial statements for the business. Let's go ahead and move on and continue about best practices for having strong business credit. Very similar to what you are expected to do for personal credit, recommendation for a strong business credit is to ensure that you're paying your outstanding loans, any bills and taxes for your business timely, as strong payment history shows lenders that your business can be trusted to manage its credit very well. Paying taxes on time helps you avoid any liens or judgments, interest, or any penalties on your business. Late payments can also be an indicator that a business is having cash flow issues. So you definitely don't want that to be reported anywhere, especially if your business is doing well. Make sure your business is visible. Lenders, customers, and other businesses want to be assured that you are a known and trusted business in the community. You become visible by having an employer identification number, also known as the EIN, phone number, your legal address, and of course, a digital presence or a digital footprint online. Maintaining good relationships with your suppliers and vendors, having a good track record of paying other businesses that you work with on time will also strengthen your business credit history. Separate personal and business finances, highly encouraged and recommended. Avoid using your personal assets and finances to support your business. Do not commingle business and personal finances. Seek advice from professionals such as insurance agents, accountants, and lawyers to limit personal liability for your business activity. Obtain credit accounts when needed in the name of your business. And of course, monitor your personal and business credit history regularly. Know what is being reported to consumer and business credit reporting agencies. And as soon as you see something reported inaccurately, please go ahead and dispute immediately. Excellent. Let's take a look and see if we have any additional questions, Joel.
I think we're good.
Excellent. So I will go ahead and turn it over to you, and you can speak to how lenders are evaluating businesses' credit worthiness.
Thank you very much. And here we'll begin our final section of the presentation, how lenders evaluate your creditworthiness. So starting with the current landscape of business credit reporting. And if you could just change the slide, please. Thank you. So now we will review the entities involved in the business credit reporting landscape and how you, as a small business owner, may interact with them. First, lenders and businesses may obtain credit report information about you and your business to evaluate whether they should extend you credit, provide you with purchase terms, or conduct business with you at all. They may also report your credit activity, including payment history and record of accounts receivables, to the credit reporting agencies. Consumer and business credit reporting agencies collect and disseminate information about credit account usage by consumers and businesses. Some companies engage in specialized credit reporting and credit report data analytics. Some create and sell their own credit scores, while others serve as marketplace to connect borrowers with lenders. Laws such as the ones I mentioned previously, the FCRA and FATCA, and the ECOA, set rules for institutions authorized to obtain personal credit reports, report data to the consumer reporting agencies, and lend to small businesses. The laws are enforced by federal and state agencies. So if we go to the next slide, we can see how we're going to put it all together. To take the appropriate level of risk and ensure loan repayment, lenders follow core strategies that are reflected in their policies. These principles are known as the 5 C's. You may be familiar with this. The 5 C's of credit, which include capacity, collateral, credit history, conditions, like market conditions, and character, your person, as the guarantor, personal character. And are used to determine the overall creditworthiness of potential borrowers. We'll focus our discussion on these principles. So walk through each of the potential underwriting factors listed let's see here. So capacity. Capacity is the cash flow that the business needs to demonstrate it can repay a loan. Lenders want to know what revenues you will use to repay the loan and whether those are documented in your financial statements and tax returns. Collateral is a form of security you provide the lender by pledging an asset you own or the business owns, such as your equipment or inventory, and agreeing it will be the source of repayment if you cannot repay the loan. When you default on a loan that involves collateral, the lender has the right to foreclose or repossess the asset used as collateral. Most lenders view seizing collateral as undesirable and therefore evaluate the adequacy of cash flow carefully to avoid it. Credit history refers to the credit performance of the owners and the business. Lenders evaluate information obtained from business and consumer credit bureaus, as well as internal financial institution information, such as performance on accounts that the owner or owners and business currently have. So things like, how many insufficient funds reports items have there been, or overdrafts, that can factor in as well. They consider information such as credit scores, inquiries, and credit utilization, as well as delinquency and some public records. Conditions. Conditions involve a variety of qualitative and quantitative measures, including the conditions of the loan, how will you use the money to expand or to purchase equipment or inventory, local, industry, and economic conditions, and the competition of your business faces, all of which could affect your financial projections and ability to repay. And then lastly, character refers to mostly qualitative and measures such as your personal integrity, business reputation, and references provided by your customers, vendors, past lenders, and other business partners. So yes, Lenders will go to your website, and having good positive reviews helps. And possibly including your social media reputation and online customer reviews. Sorry, I just repeated myself. Character is also reflected in your credit history and your business's credit history. All right, next slide, please. So moving on to non-traditional data, which is also factored in a consumer context, the term non-traditional data, sometimes called alternative data, generally refers to information about how you have handled financial obligations non-traditionally reported to credit reporting agencies, such as utilities, phone, and rental payments. In the business context, non-traditional data may include payment transactions through payment processing intermediaries, shipment volume, e-commerce trade, and merchant account transactions. Most business lending in the United States today still relies on traditional credit underwriting. However, as the lending marketplace evolves, the role of non-traditional data in accessing credit risk may change. Alternative data is not currently as prevalent as traditional data. Next slide. And so different lenders have different priorities. As shown in the examples, lenders A and B have different priorities, which may be influenced by the types of loans and credit they offer, the amounts of credit to be extended, and the types of businesses they typically serve. Big and small banks, credit unions, and other lenders, including certified community development financial institutions and online lenders, may all have slightly different lending priorities and policies governing credit approval. A good tip is to plan ahead. Research your potential financing source. Meet with a loan officer, small business lender, or relationship manager to learn details about the application process, product offerings, required documentation, expected timeline for credit evaluation, terms and conditions, and to determine the best overall fit for your business. Next slide. And so best practice, that's fine. Yeah. If you want to continue to the next slide. One more time. Great. So our final, sorry, I jumped ahead. Our final section now, section 5, is credit reporting and business operations. So now we're going to discuss other ways that you and your business may want to use credit reports from the business credit reporting agencies to support your business operations. Next slide. Qualified entities such as landlords, cell phone companies, and employers can obtain credit reports for a permissible purpose under the FCRA and FACTA regulations. Check with a credit reporting agency representative if you think you need personal credit reports for employment, background checks, or other reasons. If you are seeking business credit reports, you do not need a permissible purpose, and the FCRA and FACTA does not apply. Some qualified entities that report their customers' credit information to the consumer credit reporting agencies are considered a furnisher of information. Data furnishers' obligations include providing information that is accurate and complete and investigating consumer disputes about the accuracy of information provided to the consumer credit reporting agency. All right, so as we're wrapping up here, just some key points to remember. If you go to the next slide, please. We've got our key points here, and just go one more time. Great. So your personal and business credit reporting are important for your business. Keep it simple. Managing your personal and business credit reports and scores can help you establish your business can help you establish and build strong credit histories. Number 3 is lenders and others use credit information in different ways to make decisions about your business. And number 4 is understanding your credit and achieving a healthy credit history will increase your financing options. Next slide. And next slide. and then one more time. So here we are at the summary here. We've covered a lot of information today. If you have any questions at all, again, feel free to add those to the chat. Happy to answer anything else that might be on your mind. And if you're thinking of any last minute questions, I'm going to share some key resources as our final bit of information here. Many resources were provided throughout the module, but we have some important ones that you might want to write down if you have pen and paper. For more information about the responsibilities of a furnisher of information to the Consumer Credit Reporting Agencies, consider the following. You can go to the Federal Trade Commission website at ftc.gov and search consumer reports, what information furnishers need to know. Doing an internet search for National Consumer Assistance Plan, that can help. That was an initiative launched in 2015 by 3 consumer credit reporting agencies to make credit reports easier for consumers to understand. So I'm going to give some websites here. These are the 3 major consumer credit reporting agencies' websites. Experian is simply Experian.com with the phone number 888-397-3742. TransUnion, simply transunion.com at 800-680-7289. And then Equifax is equifax.com at 800-525-6285. And if you missed any of that, I'm sure it's available if you just kind of do a Google search. And then the 3 major business reporting agencies. It's Experian Business is sbcr.experian.com, and that's 800-303-1640. Dun & Bradstreet is dandb.com, dandb.com. That's 866-248-1450. And then Equifax Business is equifax.com/business/small-business. And that's 800-727-8495. And that concludes the presentation. Thank you all for joining. Really great participation today. Loved all the questions. Let me take a look and see if we have any last minute questions here before we jump off. Let's see here. When banks or lenders pull up your personal or business credit report, how far back do they look? Well, it's going to be whatever shows up on your report. I think we want to check with the credit bureaus on that, but it goes pretty far back. I mean, anything that you've had credit on, even if it's a closed account, will show up on your report. So it'll show up if you've paid it in full. I'm sorry, if it's closed, it'll show up and see if it's paid as agreed, or if there was something that was a dispute, or if there was a collection item. Any of that information will remain on there from the beginning, from any credit that you've had. So that's why it's important to clear up any dispute, anything that is an issue. If you don't have a business established, but you have a great idea to launch a business, are there programs that will help you launch your business? Absolutely, yeah. There's many business resource groups, in your community. You can go to the local chamber of commerce in your community. There are business centers that will help you to start a business. SCORE is a great organization. If you go to score.org, it's a nonprofit, and they have mentors that you can enroll with. They're former business owners and CEOs that can help you with all the steps to start your business, help you with your business plan, projections, give you some great guidance there. There's other presentations that kind of dig deeper into that. But absolutely, I recommend looking into what business community centers are located in your area and visiting them or giving them a call. All right. What else? Oh yeah, I can see some of you. Good job on the score. Yep, women business development centers are great. Great. Thanks, Crystal. Okay. Kathy, do you have anything else to add?
No, I just appreciate everybody joining us and staying on the call. We know it was a lot of information, so we appreciate everyone's time.
Great. Yes, thanks everyone. Really appreciate it. Hope everyone has a great day.
Thank you to our presenters. If you are a part of the BACP Entrepreneur Certificate Program, your account will automatically reflect your attendance for today within 24 hours. This webinar was recorded and will be available tomorrow or by the end of the week on our YouTube channel at youtube.com/Chicago BACP. Thanks for attending and have a great day.